Good morning, everybody. Happy Tuesday. Welcome back to more gap-filled,
Good morning,
non-expected
everybody.
move responding. What's up with my
Happy
Tuesday?
Echo here.
Welcome back to more gap-filled,
Hang on.
Good morning,
everybody.
move responding. What's up with my
Happy
Tuesday?
Echo here.
Welcome back to more gap-filled,
Hang on.
Good morning,
everybody.
move responding. What's up with my
Happy
Tuesday?
Echo here.
Welcome back to more gap-filled,
Hang on.
Good morning,
everybody.
move responding. What's up with my
Happy
Tuesday?
Echo here.
Welcome back to more gap-filled,
Hang on.
Good morning,
everybody.
move responding. What's up with my
Happy
Tuesday?
Echo here.
Welcome back to more gap-filled,
Hang on.
Good morning,
everybody.
move responding. What's up with my
Happy
Tuesday. Echo here. Welcome back to more gap-filled. Hang on. Everybody responding. What's up with my Happy Tuesday? Echo here. Welcome back to more gap-filled. Hang on. Everybody responding. What's up with my Happy Tuesday? Echo here. Welcome back to more gap-filled. Hang on. Everybody responding. Happy Tuesday. Echo. Try this again.
Working?
Yeah, that was weird. It was like an infinite loop of my own voice, and I'm like George Costanza with an audio.
My fault.
Okay.
There you go. If I
like infinite loop of my own voice.
Okay, here. Now I'm hearing it again. Hold on. All it's because I'm streaming it on YouTube.
Oh, can you just mute that?
Yeah, I just muted it.
Okay.
I didn't even realize it. I was like, that's it. It's the stream.
Cool.
You're
all
good.
Right. Well, we got it.
Yep.
Yeah, I'm like George Costanza with the audiobook where he doesn't like to hear the narration of his own voice.
Yeah. That's funny.
All right. Happy Tuesday, everybody. It's going to be an interesting day. We had 4 consecutive days of the expected move not being respected. So markets yesterday, we had a plus minus 3607 was pre-market, and we ended up sliding. We closed around 68.16. That'd be an open here and sliding lower. Markets finished about 42 points lower. So, I mean, it was within the range for the morning. I mean, until about 11:30, and then it just kind of stayed there. 68.20, 68.10, 68.20. That was our biggest gamble levels all day. I was watching it on my live gamma and looking at my dynamic trend. So both were showing us, really sticky spots around like 68.10. Today's an interesting pre-market because we have such a big futures pop to the upside. But look at how wide these levels are. Okay. Again, like I said, I've kind of got to make an executive decision here. Having 4 days in a row where the expected move is not respected. So expected, not respected. It does make, like daily trades, 0DT, it makes it pretty tricky because there could be a lot of intraday price action that doesn't respect our intraday levels, right? Here is our expected move. Let me see if I need to log out, log back in. Let's go to table. So for today's expirations on SPX, by the way, for Project Options Edge, we should have a full profit on oil futures. It's a $220 winner, which is actually coming at a perfect time because oil has been slipping steadily for the last week or two, and we still like a $5 clearance. We're fine. But let's go into today's price action plus minus 39.89. So we're going to go 39.89. And today is the 16th. We've seen the futures market jumping around. We had news this morning with non-farm payroll. We had unemployment tick up higher. Futures went from a 0.7 to a 0.9 to the upside, and now they're fading a little bit. Here's your futures look. Now we're at 0.66. So we're going to deal with like another healthy gap to the upside. Look, there is no real direction unless we're going to break 68 or 67.70, or we're going to, use this as support to then work its way back up to 69. I don't know what comes first. I do have a little bit of, just concern with just like a measured move, meaning that we have this kind of equal high that holds. Markets maybe come back down to retest lows. That is, by the way, this is a 5 to 6% correction. I mean, it's not the end of the world. Like a 5 to 6% correction, could it double in size? Maybe if we went high to low, like that's a range trade, right? We can have that range trade, no big deal. If we are going to high to low, call that a double top, and we do break this low, then you double that move. And that would put us back around like 6,100 perhaps. So if we had, let me just use a box here for measurement. Percentage wise, that move is about 390 points. So let's go to 780. So 780 puts us around the 6150 handle, which you look left on the chart. That's previous all-time highs. That's about as bad as I could see the market getting right now. And, I say that because we're having a regime change in the Fed. We still have fiscal dominance. Is the economy really slowing that badly? Here's the news from this morning. Average hourly earnings were weaker. Core retail sales were better. Non-farm, I don't think anybody's going to get excited about non-farm for a while because the numbers are low. I mean, we're not going to see like the 150 to 200K job prints. It's going to be like, if we're lucky, 50 to 100K, right? Retail sales came in flat. Previous was 0.2, came in 0. Unemployment rate has ticked up by 1%. That's 0.2 higher than previous. So forecasted 4.5, came in 4.6. So it just, again, it's like the market has a great way of making you feel really uncertain or really uncomfortable. And from a chart standpoint, prices will tell us what to do. Right now, prices are stuck in this little range. And if, I mean, zoom out and you can see that this range is meaningless, but you can see how important it is to maintain or give some back. So on that note, I didn't get filled on those broken wing butterflies. I didn't get filled on those. Um, Part of me, let's look at for the month of December. Part of me thinks that we'll still have a positive December, which is why I'm playing those butterflies the way that I am. Um, and also, I kind of want to put another trade in off of the November lows, but it's just hard to say like the timing is going to be like end of the month, right? By the end of the month, are we going to have December giving us another red candle, or are we going to try to fight this little grind through the holidays? Um, I don't know. I wish I knew, obviously, but we're still stuck. So here is the sideways chop now for 2 weeks, going in 3. So this was 2 weeks ago. So this would be week 1, week 2, and now week 3. You can see support in here. You can see support in here that becomes resistance, or I should say resistance that becomes support. So that's the trades I took yesterday, the 6,800 and 6,770. And then we have resistance here at 69. So highs might be a tall order. We're opening up with a gap again today. We'll see what daily price action gives us. The thing that makes me aware is, okay, let's say we gap up. Well, 6840 is our gamma again. Look at how wide this is. Like, this is the crazy stuff. We gap up to, let's say we have a 0.6% move to the upside, almost 0.7. So let's go from the close, go up 0.7. So we're gapping up into positive gamma. The question is will it stay? Will it stay? I mean, VIX, we had a spike up yesterday to 17 what? 17.3. Was it enough to call the bottom yesterday? I mean, we didn't really get filled on the defense trades, right? I put in the trade at like 67.70, didn't get filled. I modified a little bit because the VIX was going higher. We had measured levels down to like 67.50. They didn't materialize yesterday. But for a 0 DT, like, this is a huge level between gamma that gets us to 65 or 60 all the way down to 80 and 75. We're talking like an 80 to 90 point area, and price is expected to go 39 points today. Okay, so as I said yesterday, I think the safe thing to do is not force trades. I think the safest thing for me to do is, low deltas and structure a trade that doesn't cost an arm and a leg, has decent reward to risk. And if I want to take a trade today, it's going to be something based on where I think prices can make a higher low. Maybe give me a credit, have a profit trap. I'm typically going to err with, like, I love broken wing butterflies when I'm a little bit more cautious, because I can build on that profit trap. I can improve my cost basis, and my break even's a little bit higher on the upside, a little bit lower on the downside. But I just think it's going to be hard to contain price when we have gamma levels that are literally 80 points apart, and we're looking at expect a move of 40. Right? Like, there's a lot of factors where it's like, it just doesn't show us a lot of tightness in the market. Plus a huge gap. It's like all these things just make daily decisions a little bit more difficult. So I'll just kind of reset this whole thing. What are we looking at today? A gap higher that's going to get us back into positive gamma. Question is, if we have a gap higher, we run into this gamma resistance. Does this resistance hold? Does it push us back down? Is there a lot of indecision today? I mean, yesterday we gapped up, faded. Do we gap up again today and fade? Or do we gap up today and actually push? I don't know. We'll figure it out. We got to figure it out. So we're looking at a 16.7 VIX right now, which is going to be just over 1%. 16.77. Okay, at 1.05. I do need to take a screenshot here, post this in my ATR tracker for daily profit play. We looked at a bottom around 67.56, didn't get there. I I didn't have a single trade fill. Like my broke wing butterflies didn't fill yesterday. It's probably because I adjusted them. We did look, if you remember yesterday when we looked at like the 6,800 for the put side, 6,900 for the call side. Did anybody get that trade filled? Like anyone look at like because I'd said yesterday if I wanted to put a bear call spread or a bull put spread, it's like I want my sell side on the calls to be up above 69 or at 69, and I wanted my put side to be at 68. And we started out at 68.60, by the way. So even putting it at 68 should have been safe, and it was. But wow, like we tested it. And obviously, I don't like putting trades in for a range day that are tested. Mondays aren't usually that volatile, and Mondays typically don't finish outside the expected move. So did anybody take that trade yesterday? Like, did you have a 6,800 level? Did you have a 6,900 level? And if so, I mean, I think a dollar would have been filled. We started out at like 55, 60 cents. That dollar would have been filled. Okay. So anyway, today, another big gap, 0.73%. Let me get the screenshot here, like I said. So I'll go daily profit play, ATR tracker, the 12.15. Close was 68.16. Take a screenshot. Gamma levels. Wide open to up. Upside to downside. 4 days in a row. Beyond the expected move. Proceeding with caution. Okay, I think we just need to be really careful about our trades right now during a time that, yes, we have some news. Markets can move a little bit thinner volume, maybe some more noisy price action. We did finish inside the 50% ATRs, but didn't get filled on a trade yesterday. The level 68.72 is right. The move questionable. What do you mean 68.72? I mean, you're talking about way up here? I mean, having a move on the futures market at 0.7, it's like that's a pretty big spike up. I mean, if we spike into like 68, 65 or so, we start hitting this gamma. It's like, I mean, again, anything can happen. Like literally we can have the market. I don't even know why the market's up today. Honestly, like oil's down. We had a sell-off yesterday. It's like, why is the market up today? I don't know. Right? I mean, news-wise today, it's like, are we excited about non-farm payroll? Did it change the Fed rate decision? Like outlook? Not really. Like rates are still looking to be paused through the first part of next year. Maybe into May or June, we get another rate cut at this point, another 25 basis points. Like there's not a ton of monetary policy suggesting that we're going to have more and more rate cuts, right? It's like we have we cut in December, we have a pause, maybe April to June would be one, and then maybe one more for the entire year. So we're looking at maybe two more cuts. And honestly, the rate cuts don't even matter. If the rate cuts, it's good for sentiment, but they don't matter if this doesn't change. This is the 10-year yield. If this 10-year yield is not going lower, nothing is going to get cheaper. You're never going to buy a house cheaper unless the price comes down, but the rates won't come down. You're not going to finance anything cheaper. If these do not come down, I don't care if the Fed cuts to 0%. It's not going to change the long end of the curve. And I do think that is a pain point for the consumer to realize, like, holy crap, we have been in this, 5 years since COVID, 3 years since the bear market of 2022, and yet nothing is getting cheaper, right? So let's see how today plays out. I think daily price action wise, I wouldn't be surprised if the market were to gap higher and maybe struggle at the highs and fade. Or we have a day where we gap up and push up again, and then we fade, by the end of the week, and we still just go nowhere. So my point is, what I'm going to do is just calculate my numbers, probably put in some pending orders, I'm not even going to force a daily profit play today, right? Having 4 days in a row where we're not finishing inside the expected move, that's not what I signed up for. Like, we're not getting the expected moves. Prices are fluctuating a ton, huge gaps overnight. Just not worth it. It's not worth the trade. If anything, what I'm going to kind of pivot to is I don't mind some broken wing butterflies, okay, because I want to set them at levels I feel are pretty confident highs and lows, and then also looking at some potential butterfly spreads for maybe a directional run. One trade that'd be very cheap today, by the way, is let's say that we gap up here. We gap up here. If we put in a butterfly spread around this open price, or I should say around like the gap fill, if price comes up here and fills this gap, that should be that would be like an inexpensive trade where you can probably have like a 8-1 or 9-1 reward to risk opportunity for the end of the day, but you could probably turn this into like a 2-1 or better. That's of course if price cooperates. But I don't know if we're going to do that, right? I don't know if we're going to gap up and we could have a gap higher and it just stays here all day. I don't know. Okay. So we're going to have to figure it out. But when I go pre-market gamma, a lot of it is like lighting up and filling up to the 6780. So write that down. Like 6780 is pre-market. It could very well get hit despite the gap higher today. It could still be like the directional run, right? So let's find out. Let's see. Let me see those levels from yesterday. I'm looking at these working orders. So my 6770 zone, that's trading at 135. My 6800 zone's trading for about a buck 65. Session just logged out. All right. So plus or minus about 40 on the morning. That's pre-market SPX. We have a couple pending orders in those broken wing butterflies for the 22nd, which is next Monday, and the 31st. To be safer, and I'll just throw this out there. I put this in the bonus trade for Telegram yesterday. I'm going to tweak this. Okay. I think the better trade right now is to not force the trade through the 22nd, but rather just let the trade go to the 31st. Okay. Like just in case Monday is, not the level that I want it to be. Meaning like we have a weird week and we sell off and we don't like bounce right back on Monday. I think the better trade is if we have a holiday rally, let's embrace the idea that we could have a good fill, take this out to the end of the year and see the market stay above 6,800, stay above 6770. So on those December 31st expirations, I want to keep those. The December 22nd expirations, I want to remove those. I think these trades are okay just to get rid of, not force this like really tight window. Let me see if I cancel the 22nd, and then I'll make this I put this in as a bonus yesterday. I did want to talk a little bit about debits versus credits. I saw this pop up in my Telegram. I spent some time with Lance and his group yesterday afternoon, and I'm going to do this more in a segment with them next week just to make sure we understand the difference. Biggest thing for me is debit spread, credit spread is accomplishing the same goal. It's a directional spread. But the reason I tend to side with credit spreads is because I can have a better cost. My break even is lower. If I need price to go up, my break even is lower on a credit spread. If I need price to go down, my break even is higher on a credit spread. Does that make sense? If not, we'll go through an example. Let me go into this bonus trade here. So bonus trades, I'm going to keep this here and put this up again. So this will be a bonus trade update. I'm making an executive decision and canceling the 12/22 expiration SPX trades, but I'll keep the 12/31 expiration SPX trades. Current bonus trades. There. So SPX 12/31, SPX 12/31, those two are still pending at $2. If you want to go after, more credit, throw this thing at like 250. That way you're risking 250 to make 250. That's a 1-to-1, and you still have a profit trap on top of that. $2 is a little bit easier to fill. I'll take on a bit more risk, but I think those levels are pretty solid to stick, in my opinion. Okay, so I'm gonna delete the 12/22s and just stick with the 12/31s. Cool. All right. So today we open up in about 5 minutes. Let's get some levels. 67.80. I'm just going to make a note here. Biggest pre-market is 67.80. That would be a very disappointing move today, by the way. If we gap up 0.6, 0.7% and then fall down, that's a big fat decline. I'm not saying it's going to happen, but let's say we gap up. Do the numbers here. We're going to gap up around 0.6%, right around here, around 68.60. If we fall there down to 67.80, that's another 1+% drop on the day, 1.2% drop on the day. The VIX isn't showing that, right? The VIX is at 16.7. The VIX would have to rip up to probably, 17 or 18 for that to happen. Could have happened, sure. It's just, I don't know. Maybe this is a gap up and the price does absolutely nothing today. But we typically just don't see, gamma levels this wide, like not be hit. And I don't know if it's going to be opening here, hitting resistance, and then bouncing back and forth between positive gamma, negative gamma, and this is going to change in real time. I do have, obviously my real-time gamma once we start here in a few minutes. And then we have our live gamma levels as well that'll fill up through the morning. This is a 0DT. Okay. So what I'm reading right here is like the biggest level. I have a 68.50. Okay. And then a 67.80. Those are my two standout levels for right now. To the upside, maybe a bit towards the 68.60, but we're going to open there. Like we are literally going to be opening there based on the gap. So it'll be interesting how this all kind of shifts around. I think the safe trade for this morning is, and again, maybe, I don't know. I might have some fun today. I'm going to be out of the office for most of the day, which kind of sucks. Like, so whatever I do decide, it's probably the safe thing for me to do is just not force a trade. That's probably the safest thing. So whatever I do decide is making sure the risk is under control. Like I don't want to risk a ton today. I want to have a profit trap opportunity. I'm trying to think. I guess I could be on my phone. I have a vet appointment for my dog, and we have a baby appointment for baby number 2 that's 24 weeks. So we'll be on the road for a couple hours. So what I'm thinking is looking at these expected moves and maybe putting in some broken wings and trying to get filled for like 250, risking 250 to make 250, have a profit trap and see if the market actually does stay inside this like plus or minus 40. Okay. Where are you seeing the gap up? Well, it's futures, man. I mean, we're going to see a gap up most likely because futures up 0.61%. So SPY. Okay. So we're not going to have a gap at all. So if SPY is down by $1, futures is up points. Like, what the hell's going on? This is so weird. All right. So we don't see a gap up. My bad. I'm just usually my gap up, gap down is based on the futures market. Usually that's like what we see coming into the open. So S&P futures is up 0.58%, but SPY is showing down about $1.40. So yeah, I guess there's not going to be a gap. All right, my fault. Yeah, maybe. All right, well, scratch that plan. I thought we were gonna have a big gap to the upside and deal with that like we did yesterday. Gap up and fade. So today it's gonna be maybe a small gap lower. Futures is kind of operating on its own island right now. So we'll just kind of approach the day as we need to. I'm gonna adjust my daily probably indicator to 68.16. We can recenter it. VIX is around 16.77. 16.77 is a 1.05% move. Let's see. So I'll recalculate my highs and lows. So 67.80. If we do hang out here and let's ignore the gap for a second, so we might not have one. If we gap a little bit lower, this 67.80. Let's see if it bounces. So if we gap lower, find it, I would say that would be a pretty strong support level. I would hope. If it's not, we've got bigger problems. Okay, so let's see where we're opening this morning. I'm showing an open right around 6,800. So a tiny little gap lower. So previous day's close, there's my open. We've got a VIX around 16.77. Again, watch this VIX. We could spike up again to the 17s. We got to keep an eye on that. I've got a chart alarm set at that level. I'll set it down here, kind of intermediate, and then set another chart alarm just to keep an eye on the VIX in case it's elevated. Let's have a look at the day. So question for me is, on the put side, expected move, 70. If I did 70 here in a skip strike for a broken wing, if this trade would fill for, let's say, $2, actually, you know what? I might as well make it worth my while and make it 250, which means this trade kind of has to be in the money. If I did this trade like in the money right here, even that trade for a butterfly structure, broken wing butterfly is trading for like $1.65. So if I put this at the expected move, 70, 65, and 55, like, can this trade for, let's say, $2 credit, risk 3 to make 2, but also have a profit trap in there? I'm going to put that trade in. So I'm going right around the expected moves today. 70 is below my gamma. Let me go real time here. So I've got a big gamma level at 67.80 to the downside, and then we have that positive negative gamma pivot point at 68.40. All right, here's what I'm going to do. I'm getting a little creative this morning. I'm not going to do a daily profit play. And I'm just daily profit play. I'm just going to put a pause on it right now because we've had 4 days in a row staying outside the expected move. So I don't want to take on that type of risk to reward profile. It's not worth it if the markets aren't going to respond to expected moves. Not right now. When does this all resume? I don't know. Let's get through the freaking holidays, right? It's going to be like January 5th or January 12th. We're back to normal, and we can trade every expected move we want to for the entire year 2026. Okay. But this does get weird. And I've said this last year during Thanksgiving. I said this during Christmas. We see days where when holidays are falling in the trading week, we see days where it's like prices just kind of move, right? And it's hard to kind of gauge your expected levels. It should still be within this, but it's clearly not being the same. Okay. I did vote on, yeah. It's in there for the 12-15 tracker. So I'm going to put this one at around the expected move. This is going to be a $2 fill. This is what I'm asking for. It may not fill, but let's find out. So I'm going to try this one. Okay, and I'm going to go up to the 50% ATRs at 50. So I'm going to start at 50. I'll go 50, 55, and 65. Same thing here for $2. All right. So trades I'm putting in this morning. These are going to be pending orders. And I'll look at the daily profit play levels as well. If I'm just taking this from a standard daily profit play, I look at my deltas right now. I would do roughly a 68.60 or 68.55. This would be the call side. And let me go way down here on the put side, 67.40. Are you kidding me, man? So I can go 68, 60, 65, 67, 40, 35, and it's trading for 80 cents. Now, if I get $1 out of that trade, it's not a bad trade. From what I see, it's like that's below the gamma, that's above the 50% ATR. Let's see. I am going to play. Is this overlapping at all? This is overlapping on that broken wing. Fudge muffin. Well, I can sell this. So I can go 60 by 70 and then 40 by 30. So that's $1.60. I'm going to take this trade for $1. This is more risk, by the way. If I go 5 wide, I think I'm only getting like 80 cents for it, 90 cents. So if I go 10 wide, $1.60 this morning. Part of me wants price to come to me. It's above my butterfly. It's below my butterfly. Okay. Only issue on this, I do like this trade. The only issue is like I don't really have the means to manage this in the morning outside of setting my take profit, I guess. But let me see if I go 30%. So $50 move. So if I manage this down to like $1.10, just take the profit. It's not too bad. All right, I'm gonna go after it. $1.55 to $1.60 this morning. Not trying to hold this thing all day, just trying to get some. All right, filled for $1.55. All right, trades in. All right, we got some action. Trades coming at you for daily profit play. And I'll post those pending orders as I haven't been filled yet. So SPX, today's the 16th. Trade just got filled. Okay. So trades in for $1.55, and I'm looking for hopefully a $1.05 debit or lower. So positions, SPX, 1, 2, 3, 4. By the way, my waterfall from class yesterday did get filled. That $1.05 credit did get filled yesterday. We did the May 15th out 16+% margin for error. That trade did fill at $1.05, which is what we talked about pending. So that did get filled yesterday. Who my waterfall traders got filled? Dave on that target. Okay, good. David got filled. Kent got filled. Arthur filled. Nice. Dave on the 1231 showing credit of $1.70 if filled. What credit should we target? Well, if you're filled for a credit, then you're looking to manage it for a debit, right? If you got filled for a $2 credit, I'm going to try to manage that thing for like a dollar debit and try to take 50% of the profit. Or if I want to kind of call that support, I'm going to let that decay down to like maybe 50 cents. Yeah. All right. Pending orders on the broken wing butterflies. So SPX 12/16 expiration. These are working orders here. So these two I'm putting in as pending. They may not fill today. We'll find out. It's right around the expected moves, but I'm asking for like a pretty good credit. I'd be risking 3 to make 2, but also have a profit trap potentially up to make $7. So that is a let's see here, buy the 6770 put, sell the 6765 put, buy the 6755 put for $2 credit. And then the other one for the highs would be the 12/16 expiration SPX. That starts at 50. Buy the 6850 call. Sell the 6855 call. And buy the 6865 call for $2 credit pending. All right, those two trades that I just posted in the chat are pending orders that I'm going to keep for the day. The daily profit play has been filled and posted for members. This trade, I'm looking for a debit of $1.05. So I got filled for $1.55. I'll go $1.05 for my debit. Get out of here for hopefully a $50 winner. Okay, so if I grab 50 out of $1.55, I'm going after a 32% take profit, which I'm fine with. Especially going 10 wide, just stick to my like 25, 30% mechanics and just get out of the trade. Okay, so I'm putting a $1.05 debit to get out. All right. What else? That should be about it for the morning. Key levels that we're watching just got filled at the 60. So 68.60. I'll put this on the chart. 68.60 there, and 67.40 there. So this is where I'm looking for price to stay in between. VIX is slowly going higher. So as far as like defense trades, watching that VIX, we're at 17.12 this morning. I had David that sent me an email yesterday. So just, we'll talk about this more Wednesday. I do have a masterclass Wednesday, daily profit play masterclass. Masterclass Wednesday, 2 p.m. Eastern time. Okay. So we'll talk about, putting in our core strategy plus our defense trades. And I'm doing the math based on like I'm giving the market a little bit extra breathing room and a little bit extra like up and down to be as safe as possible for those highs and lows. Because to me, a defense trade is like it's critical that we rarely see price going higher than our calculated levels or lower than our calculated levels. I want price to be within those levels because that's the whole point of defending the trade is I've got to be confident that price won't go too high, won't go too low, right? So VIX at 17.2 right now. Question is, are we going to start tagging these chart alarms? Are we going to get like a crazy run into the 18s, 19s? I don't know. So I'm going to have a chart alarm up here maybe at 19. Chart alarm up here at 20, just in case the VIX wants to do something really stupid today. Hopefully it's not the case. Obviously, like I don't want to see prices be stupid. We're already at 6,800. Okay. That level that I talked about this morning, what was it? 67.80. Okay. What's my live gamma? 67.80. Like that's by far the biggest level. Does it offer some type of support? Maybe. We are in negative gamma right now. Okay. So it's going to be really important to see that this little cluster of lows around that 50% ATR holds. If we come down and find it and hold it and it comes back up, easy peasy. Let's see what happens. So a couple things that we're kicking around today. We have a plus minus 39.89 on the day, plus minus 39.89 on the day, and that's going to be based on the open. So let's see if price actually gets us there, or I should say if we stay within this range. That'd be the first time in 4 days that it happens. That's been pretty discouraging. Even though we haven't, we took a loss on Friday last week. That was it. But it's still annoying to see that the market hasn't responded for 4 days. Is today the day? Probably. It's like, I mean, as we can, it's like, as we keep going, it's like obviously the odds are in our favor that the market makers actually care. Today could be that day, but still, it's not worth the risk of doing something silly and just assuming that market makers are allowing prices to just drift too much. So I think a lot of that's just we have wider gamma levels, we have less volume, markets just kind of flowing around. So we just have to just be careful. Like don't force trades, don't take a lot of risk. Period. It's unnecessary. Don't take a lot of risk. Okay. Let me see where my working orders are at. So 65. All right, let's get some calculations on the VIX. VIX is around 17.3. So 1.08. Take that from the open. So we open here. 1.08 puts us down to maybe 67.26, which is a ways down there. And that's not it's not the guaranteed low if the VIX continues to go higher. That's a ballpark right now. So what I'd like to see is, okay, so we have some gamma down here, 67.80, 67.75. If that offers some support, that's also the previous level of that NVIDIA resistance, right? The NVIDIA sell-off candle was a gap higher and then it fell. If that offers resistance here to become support, we'll see if that, holds and pushes price back up. see. Just trying to look at the slightly bigger picture. So this is the, first real attempt in the last 2.5 weeks that we're trying to break some of these support levels. We tested it on Friday with that nasty sell-off, that 68.10, 6,800. Now that we're below that, watch this level. If we're coming down to 67.70, watch that level. Because if that offers a bounce, then my structure is correct. VIX is going higher, so we can't really calculate that low yet. Okay, my put side. Do I need to change the put 100% ATR 6750? I'm going to do a quick modification here. So I did 40 and 30 on the daily profit play. All right. I know we're moving fast here, but on the broken wing puts that I put in the Zoom chat, I'm going to adjust this down to a 67. Let me start this one a little bit lower. So I'm going to start this one at like the 50 pin. So let me go. So the 70, 65, and 55, I'm going to cancel that one and go just a tiny bit lower towards the ATRs. So let's go. I can go 55, 60. I can do that, or I can skip it down here. That's a little bit better. For the 16th, I want to make sure this canceled. So 16th. Ah, crap. I just put that. All right, this trade can go back in for the 31st. Okay. So 31st, and I want to get rid of this one. So I need to cancel this December 16th. And put these back in. All right, let's go to today. So here is my current trade. Right now, I have my call side for my daily profit play. I have my put side for my daily profit play. What I'm going to do is sprinkle in a buy, sell, buy, and sprinkle it in around those levels and see if this will get filled for $2. All right, so it's a 50, 45, and 35. So I'm just going to make a quick adjustment here. These pending orders on those broken wings, I'll put this in the Zoom chat. The put side is going to be a 50, 45, and 35 for $2. There. So those are two pending orders. I just adjusted both sides. $60 and $70. That'd be quite the recovery. If we get all the way back to $68, $60, and $70, that's making a rip all the way back up to yesterday's high. Not saying that we can't, but hopefully we don't. And even on the put side, okay, just give this a moment. All right, VIX was up to 17 and change this morning. We had a VIX around 17.43. Okay, so 17.43. If that marks the high of the day, we're looking at like a 1.09% move. So take your close from yesterday and go 1.09. That's around a 68.91. 68.91. So 68.91 with a VIX at 17. 1743. So it's a 1.09% move. So 17.43. And our bottom would be based on the open. Open here, go 1.09. There's a bottom around 67.25. That's a 17.43 VIX. Okay. So on the calculated high, which that's it's serving now as a defense trade. So 68.90. 68.90. If I pin so if I try to pin this thing at the 91, it's like I'm going to go a little bit higher. I'm going to go 90, 95, and 69.05. Take this trade for $1. And I'm going to repeat that trade and try to get filled for more credit as well. So 90, 95, and get this one filled for $2. So $1 credit, $2 credit. Why won't that fill? 68.90, 95. So buy. There. For $2. There we go. So try to get filled at $1 for a defense trade. Try to get filled at $2 for a defense trade in addition to the other trades I put in this morning. So I've got it surrounded. I feel a little bit more confident calling the top today if we, get outside of our range. So daily profit play, I want price to stay inside this blue zone. If we're below this level, above this level, turn it into a win. That's a DPP. Awesome. Okay. Defense trades. We'll see what price does. If price is going to test levels and maybe get to like the high of the day, pretty confident that's the way we can calculate it. If the VIX does not go any higher than 17.43, that's probably the extreme. To the downside, the always the sketchy thing about the downside is if we are dropping, the VIX is most likely not topping out yet. So you got to be a little bit more cautious on calling the bottom, just because we don't really have that high price in VIX that we can say with confidence is going to be like the top of the VIX. All right. So net for the day, here's what I have going. I have a daily profit play filled at $1.55. I actually like that trade quite a bit. And then I have some working orders with broke wing butterflies. So I'm going to take a screenshot of this for daily profit play members. You got the bonus trades in here for Zoom. So those are two levels that I'm sitting on. And then working orders would be right here. So all for the 16th. These three. I'm going to trim one of them. All right. So these are my pending orders. Like that. So all these are expiring today. Some of these may not fill. That's okay. But they're out there just in case. I'd be risking 3 to make 2, risking 3 to make 2, risking 4 to make 1. But these all have profit traps of $500. So that profit trap is still a portion of the trade. And then risking 3 to make 2. If they get filled, awesome. I actually like all the trades. Okay. So quick update for DPP. DPP update. Standard DPP is in. Okay. Those are optional. You don't have to take those trades if you don't want to. But let's see what our DPP is doing this morning. So far it's up 10, 12 bucks. Okay. That shows over 50 bucks. We take some profit. Okay. Nice, Arthur. Happy to hear that. Okay, here's a spot check of some real gamma. We're right in between. We have our positive negative gamma pivot level around 68.40. We have our gamma support around 67.80. Pretty good response off that low, to be honest, right? That's pretty close to our NVIDIA top candle. So right in here, looking at this, previous resistance, okay, it's close. It's within about 10 to 15 points of that level. That low's around 84, and this is around 70 or 71. So pretty good response off that level. And we'll see what the rest of the day looks like. But my daily profit play levels are up here and down here. So hopefully prices stay below, above for a nice daily profit play win. That's all we need. And then if we've got some broken wings that get filled, great. It's going to be, those are harder to get filled in a 0-day environment because price has to be pretty volatile. If they get filled, I like the trades. If they don't, no big deal. See if we just carve out a winner. Okay. All right, really quickly, I do want to spend some time. I know this posted this morning. I'm going to spend about 5 or 10 minutes on it, and then we'll play a little daily profit play segment and masterclass tomorrow at 2 p.m. Eastern time. And then I've got to get this poor little Frenchie to the vet. So let's talk debits and credit spreads. Okay, this should be a review for a lot of you, but this is also a segment that I can use. I mean, if you're watching this on YouTube and stuff, like just a little trust content and just good old review. Debit versus credit spread. And I'm gonna take the very simple approach, like just a simple directional spread. Okay, so debit versus credit spreads. I'll just put debit spread versus credit spread. Okay, and we'll take this from the standpoint of simple directional bets. And also we'll do this simple directional bets and risk defined bets. I guess I'll just call them trades. I don't really like to think the market is betting, but maybe you think it is. I don't. I think it's probabilities, which I know professional gamblers will say it's betting, but it's a calculated risk. Anyway, debits versus credits. We'll use the same instrument. Okay. So let's say that we want to trade the SPX. So we trade this almost every single day in daily profit play. So SPX. And here's the scenario. Okay. So we have the SPX now until December 31st, right? The question we're asking is, will price be higher or lower? That is the first thing we're trying to tell ourselves. Will price be higher or lower? So that's what I want you to answer. My question is, from right now until the end of the year, is the SPX going to be higher or lower? Based on what you say in the chat, we'll determine what strategy or what trade we take. Okay. All right. Arthur says higher. Who else? We got a lot of people in the room today punching some letters on those keyboards. Okay. Terry says higher. Arthur says higher. Blake says higher. Okay. Pio says lower. Randy says higher. All right. This is when I'm always optimistic. Perry says higher. Nessa says higher. Okay. All right. We'll go consensus and say we're seeing some higher. All right. So survey says higher. SPX live price is 68.17. Okay. Let's look at a trade. At a trade and compare the risk, reward, and break-even prices on SPX debit spread versus credit spread. Right? So we'll start with the debit spread. If we go 12/31 SPX 12/31 expiration and we buy let's say we buy the 68.15 call and we sell the 68.20 call. Let's see what that's going to cost us. So if I go SPX out to the 31st and I buy the 15, so I buy the 15, I sell the 20, it's going to cost me $3.20. Maybe less now. I think it's safe to say, let's say about 3. Wow, look at how like wide that is. 280, 320 to 360. I'm going to put like 310 to 320. I think that's a fair range. So that's going to be like a 310 to 320 debit cost of the trade. Okay. So that means my break even price is 6815 plus the debit, or 6815. And let's just say we traded this thing for like 315 plus 315. So my break even is going to be 6818.15. Okay. And we need price to be greater than 6820 for our full profit, which would be $5 minus the 315 debit. So we have $1.85 max profit. Everybody with me on that? So our scenarios, we're staring at S&P. We think it's going to go higher for the next couple of weeks. We do a debit spread. Our break even is 68.18.15. We can make $1.85 profit on the trade. Okay. So if by December 31st, SPX is trading at 6,900, we'll keep the $1.85. Cool. All right. So credit spread, we can do SPX. We can look at the 12/31 expiration. Price right now is trading at 68.07. We'll keep the same. Well, we did it like an at the money. So let's see if we went sell the 68.10 put, buy the 68.05 put. I'm doing this so it's roughly at the money. Let's see what that one trades for. So if I do the at the money, if I sell the 68.10, 68.05, I get about $1.90. Okay. The point is, it's going to be about the same amount of risk either way. It's just a matter of we need to understand the break evens. So let's say we can get $1.90 credit. Okay. And that's the premium collected on the trade. And we have a $3.10 max risk. Cost of the trade and also our max risk is the debit on the debit side. So $1.90 credit is our premium, 310 is our max risk. So we have our $5 spread minus the $1.90 credit equals $3.90 max risk. Okay, our break-even price is the 68.10 minus the $1.90 credit. So 68.10 minus the credit, or 68.10 minus $1.90, and that's going to be 6808.10. Okay. We need price, SPX price, to be greater than 68.10 for our full profit. So $5. This would be at expiration. If price is 6810.01 or higher, we keep full $1.90 credit. Okay. And remember, SPX, there's no assignment risk. It's cash settled. Okay. Yes, there's fees attached to it. I get it. Like you're going to pay the CBOE feed, and then you're paying your contracts on options. But that's the cost of new business. Nobody trades options for free. I trade options for 60 cents a contract, which is fine. But there's no assignment risk. So this is where, I have a lot of objections to like, well, Chris, I don't like to do credit spreads because what if I get assigned? Well, if you trade an index like SPX, there's no assignment risk. This could just cash settle. Okay. So my question to you is just like looking at a debit spread versus credit spread, your risk and reward is pretty much the same, right? I mean, if we want to, we can say that we're paying 310 debit here. So if I go that way, we have like $1.90 is going to be our profit. So we can go $1, we'll go 310 debit. Okay, 310 debit, which puts our break-even price at 310. So that puts my break-even at 68, 1810. And then instead of the $1.85 risk, we're going to do the 310 debit. That way we keep the numbers about apples to apples as far as risk. And this is fair. It's rare that you're going to see like, oh, well, the credit spread is actually going to be less risk. No, it's going to be about the same. Okay, so I want to make sure like we're not skewing the results here. You're going to have roughly the same risk and reward. The difference, however, is the break-even price. That to me is the biggest advantage of if you think the market's going to go higher, wouldn't we want a break-even price that's better? What break-even price would you want? At the end of the day, if you're going to hold this trade to, December 30th or December 31st or taking partial profits, wouldn't it be nicer to know that your break-even 68.08 versus if it's an at the money, we're trading at 68.06. Let me look at this trade here. If we did an at the money debit spread, if I buy the 05 and 10, I pay we'll pay the same thing, 310. Okay. But you're increasing. So that's what I want to note here is like the break even on a debit spread, you are increasing the break even price because of the paid debit. And down here on a credit spread, you are decreasing the break even price because of the collected credit. Okay. That's probably my highlight of the quick and dirty version of a debit spread versus credit spread is if I need price to go higher, it'd be nice to have my break even cost go a little bit lower. That way price just does what it does best, hopefully goes sideways or higher, and we make money. Is that fair? DPP at $50, cool. Take the profit. I'm going to take a screenshot. So here is a screenshot, and I'm just going to highlight the break-even prices. That to me is I would say for my biggest like advantage versus like pros and cons. I don't see a lot of negatives for trading credit spreads, especially with an SPX or an XSP that is a cash settled instrument where there's no assignment risk. I would play credit spreads most of the time. Okay. Reason why, if you want price to go higher and your cost basis is lower, if your break-even price is lower, that's the best thing. Lower your cost basis. Okay. Any questions on that? So, it's just, as I say many times, it's just thinking through a strategy, thinking through the trade. If you have an idea, if you want to be directional, debit spread versus credit spread, pretty simple stuff. Okay. Any questions on this? Because I'll have Blake play a little daily profit play segment. We'll have a masterclass tomorrow. I'll share this. I've got that screenshot available if anybody wants it. I can just post this just for fun in Telegram. Bonus trade. We'll do a little. Where's my? Okay. See if ChatGPT can come up with a creative thumbnail for me. The objection is usually you risk more than you make. Yeah, but you're doing that on both of them. Right? You're doing that on both of them. Like literally in both those situations, your risking and reward is the same. $1.90 credit versus a 310 debit. It's like your risk and reward is the same thing. So unless you're going to craft a trade where your reward to risk is better, and that's just a difference of the strikes. If I wanted to pay less for a debit spread, then I go out of the money. If I wanted to collect more from a premium trade, I go I'd have to go what, out of the money? Like if I went out, or let me see, put spread wise, if I went, no, I went in the money. So if I did like a 68.30 by 25, I can pull in more credit. If I go 68.50, but it's like a way in the money, it's like I can pull in way more credit, but now I need price to move. That's the trade-off. But for the like this example, it's almost an identical reward to risk profile. The difference of to me, like the biggest difference is my break even. Yeah. So this is why I say like you got to understand the break even price. If you don't know where that break even price is, you're like placing a trade and price goes absolutely sideways. Well, if price went sideways, you might still be risking money on your debit spread. If price goes sideways, you actually might have a break even or better on your credit spread. You know, so it's like this little simple math stuff. It's like you got to be able to do this, right? And this is what it's also. It's like I'm not just defaulting to like buying calls and buying puts because I think to me, it's like I'd rather trade risk defined. I'd rather know exactly where my break even is, and I don't want time to hurt me nearly as bad as what it would be on just like a long option. A long option time is like your worst enemy. In a spread trade, time is kind of neutralized in the equation. All you need is time to like see if price is high or lower, and you can make money. But if you need price and time to work in your favor, you have a very small window to do that. Okay. All right. So I'm gonna throw this in just for fun. Took a little classroom notes, uh, live discussion of debit spread versus credit spread on a trade example. For me, one of the most important takeaways is understanding risk to reward and the break even price level before ever placing the trade. Okay. And the notes right here. Oops. Okay, there's the notes in Telegram. So if you're in my public Telegram, there you go. Classroom notes, and then there's a screenshot. Cool. All right. Blake, my man, let's fire this thing up. Let's take a look at daily profit play this morning. Looking pretty good. Little improvise in the morning, but up about 40, $50. If you got that $50, take it. If you can go $1.55 credit, take it at an 05 or $1.05 debit. Not a bad way to grab some profit this morning.
Right. Not
Hey,
bad at
man.
all.
All right.
Crazy data driven day. All right. I know you got to head out, so I'll kick this off.
Sounds good. All right. Class tomorrow. I'll see you tomorrow in
Explain.
class, everybody. I'll be back tomorrow, bright and early, same time, same place for this, our daily profit play session, and then master class tomorrow at 2 p.m. And let's have some fun this week. So, all right, Blake, thanks, man. See you soon.
Yeah, no problem. Have a good one, Chris.
Bye.
Later.
This has been a zero DT strategy for the last 3+ years. There's always a risk of loss.